Stop sizing multi-pair EAs with equal lots. That's why one pair wipes out your gains. Use risk parity. Scale each pair by its volatility so every instrument contributes equally to portfolio risk. It's one simple mindset shift that immediately stabilizes returns.
The compact formula. Compute inverse vol weights Wi equals 1 over sigma I divided by sum of 1 over sigma j. Position size I equals target portfolio risk times Wi divided by volatility measure, ATR or daily stat. Then apply a correlation cap so correlated pairs don't double your risk.
UR/USD low vol gets a bigger weight. GBP/JPY high vol gets smaller. If UR and GBP pairs are highly correlated, the correlation cap reduces both weights, so the portfolio stays balanced. Lower drawdown, smoother equity curve. Practical rules. Use a 20-day volatility window and 60-day correlation window. Cap correlation around 0.6 to 0.8, and rebalance weekly or monthly. Always backtest the sizing on your EA and enforce a max exposure per currency.
Want the template? I built an Excel/Python snippet and MQL function to apply this rule across multi-pair EAs. One click to size positions by risk parity. Follow for more, grab the download in the description, and start stabilizing your returns today.